Don, good to see you. Let me start with you. So we've seen a big sell-off here in the last 2 days. We're reapproaching 11,000 from the wrong side. The people who are selling into this, justified because of the uncertainty about higher oil prices, higher gasoline prices, or are they making a mistake?
Well, look, if you can't stand the heat, get out of the stock market. But the reality is that even with these 2 bad days, we've only had a 2.6% correction, at least in the S&P, from last Friday's highs. That means we've now gone 99 days without so much as a 3% correction. Now, does that tell you how amazingly strong stocks are? First of all, it's just incredible that they could go that long without a correction. You would think that would make them vulnerable. Then Muammar Gaddafi sets the Middle East on fire, and they only go down 2.6%. I'm telling you, we're in a bull market.
Jim Iorio, do you agree with that, or do you think there's more to this correction coming?
I do think there's more to the correction. Don makes such a great argument. I almost found myself wavering there, but I do think there's a correction for some of the same reasons that he just said.
Just give in. You'll be happy.
No, I will not yet. But the 99 days, whatever that number you said, and we've had zero correction at all. To me, the longer we go, the more strong that correction could be.
I mean, no matter what, the bottom line rule is you want to make sure that you've got stuff in different places, so no matter what the market does, you can benefit.
Sure, if what you want to do is control risk, that is the way to do it. Diversification is the only free lunch you'll ever find in markets. You've said it yourself just in the last few minutes that one of the reasons stocks weren't lower today is because there are a large number of large oil companies in the indices, and they went up today. But you know the amazing thing about that? You can tell 2 different stories about that. Sure, the oil price went up because of a panic in the Middle East, but the oil price has actually been going up pretty steadily for the last 18 months. So is it a panic story or a growth story? We've been talking about energy stocks as a primary long for our clients for 18 months because you win both ways. It's a growth story and it's a great hedge against panic.
Well, Luskin, you sound so bullish, but if gas goes to $4 or maybe even $5, can the economy sustain that?
Well, look, it's not helpful, right? I mean, wouldn't it be great if energy were free? But you know, all the historical modeling that you can do shows that what really causes a recession in terms of oil shocks, it's not just the price of oil, it's the path that the price takes. So a typical rule of thumb that a lot of econometricians like to use is when oil makes a new 3-year high, that represents enough of a shock. Well, the high at 147 on crude oil in July 2008 is still within the 3-year window. So we could go up another 35% in the oil price before we trigger that alarm. So, you know, another thing you have to realize is in an economy that's just still coming out of recession and is operating so far below capacity, is actually less vulnerable to oil shocks because it doesn't use as much oil.
That is a good point. All right, wait, guys argue, yeah, long term it's good for the market. What do you think? If we get wind that they are going to win in Wisconsin, and they're finally going to break the collective bargaining rule for the union there, or the public sector union in particular, does the market rally? Do muni bonds rally?
Look, it's gigantic. This is a zero-sum game. There's only going to be one winner. It's either going to be the noble investors who hold those bonds or the blood-sucking parasites who are in these public unions that have negotiated these absolutely impossible pension deals. It's black or white. One will survive, not both. So if you want the bond market to rally, you've got to disenfranchise the public sector union member who has, at the moment, an entitlement to cash flows in the future that are going to come right out of the pocket of the bondholder. So, yeah, take away those unfulfillable promises. Bondholder wins big time. It's got to happen.
That's the problem with you, Don Luskin, is you never know what you're thinking, right? I mean, you just keep it so close to the vest. Don Luskin,
I'm trying to be subtle here.